morning everybody, or afternoon now I should say. I am jumping on here to give you some tips on mortgages today. So if you're new here, my name's Sarah Irons. I am a mortgage and commercial property finance broker and insurance broker. My channel has two elements to it: mortgage tips and information, and I do a few light-hearted fashion hauls and interior hauls as well. I probably will separate them out, but for the moment I'm doing a bit of both. However, we are in a horrible time at the moment. Some of you are going to be at home self-isolating, some of you are now working from home, and yeah, it's very worrying times out there. So I just wanted to jump on and just share with you some things that are changing in the mortgage market, and just give you some information so you can better prepare and have better knowledge and decide what's right for you and your family. Today I'm going to talk to you about product transfers or product switches. This is when your own mortgage product, so your fixed rate, for example, you might have had a 2, 3 or a 5-year fixed deal, that might be approaching the end. Did you know that 3 months prior to the end of that mortgage, you are usually, depending on your lender, but most do this, allowed to switch to a new product with the same lender, and they will waive your early repayment charge. So if anybody out there is on a higher rate, let's say you had a 5-year fix and you're coming to the end of it, and you're on a rate of 3% and above, depending on your loan to value, of course, you don't have to wait till the end. You can speak to a broker now and see what rates you can switch to, and now has never been a more important time to do it, and I will go into that in a moment. So a product switch means you stay with the same lender. Normally a remortgage would have given you a better rate, but not so much now. So as long as you don't need to change anything about your plan, in other words, you don't need to stretch the term, you don't need to raise any capital, and you're simply just looking for a like-for-like remortgage, then a product switch is probably or very likely to be something that you will consider. The rates are very competitive as if you were doing a remortgage with a new lender. The benefits of a product switch are you can make a change and swap it the next month, depending on the lender. You don't have any underwriting, so no proof of income, no sending any paperwork to the lender, no valuation and no legals. So it's a very quick process to get you just simply swapped over to a new rate, and you would tie in for another 2, 3 or 5-year deal, whichever one you decide at the time. Now, loan to value dictates the rate. When you do a product switch, 9 times out of 10, they will do something called a desktop valuation, which means that they will look online at the Halifax Price Index and they will set their own valuation for your home. That's sort of based with what's happened around the UK, so the percentage averages around the UK. That's how they're going to determine the value of your home. Once they've determined that value, and you know your mortgage balance, that will be the loan to value of the product that you can choose. Now, if you've recently decorated or done an extension or bought a home, and you actually feel that you bought it well, or the value of that property has gone up, then you might not be happy with the desktop valuation, and you can ask for a valuation to take place where a valuer comes out to the property, and usually they will come into the property. So at the moment they might not be able to, but certainly as of today they can. It's not advised that you get too close to others, but they are still going in at the moment. And then they will set a new valuation for you, and your new product will be determined by the new loan to value, if the value has indeed risen. So product switches, so it's important to know that if you are approaching the end of your mortgage, you can do it early normally, and any penalty that you've got will be waived. Check with the lender, but most lenders do allow this, not all. And obviously the bank base rate is dropped unbelievably twice to 0.01. Now at the moment product interest rates were low anyway, and we have seen 1 or 2 of them honouring the bank base rate drop and lowering rates again. This morning, worryingly, we had our first lender that has done the opposite, and they've actually taken a step back from the market. They've actually upped the rates. They've pulled their 2, 3 and 3-year fixed products. They are pulling back on affordability but these are remortgages. That doesn't actually apply to a product transfer. So a product transfer, 3 months before the end of your product is up, you can switch without penalty. You will have access to all the latest rates. There's no underwriting, so don't worry if you've got not enough income, or you've had a bit of adverse, or you're out of a job at the moment. If you're paying for your mortgage and there's no arrears, you can do a product switch. So that's the first thing. The other thing that's just really relevant at the moment is you've probably all seen, and if you haven't, here's some information for you. Most, if not all, of the residential and buy-to-let mortgage lenders are offering a 3-month holiday break, which means a 3-month payment break from paying your mortgage. What they will do is they will still add the interest on to the debt, and so basically when you start paying again, your monthly payment will be slightly more than it is now, so watch out for that. But they will give you a 3-month holiday break if you are affected or in financial hardship due to the coronavirus. Some commercial lending is giving a 6-month break to businesses, so that's something to be looking out for. But before you all pick up the phone and go online and rush to get your holiday break, it is only for 3 months. So make sure it's at a time where you do need it, because who knows how long this is going to go on for. Hopefully not that long. But if it does, and it is an unknown, do you need that holiday break now, or are you okay at the moment? Do you need the holiday break for 3 months when you actually need it, i.e. when you are in financial hardship? So that's the first thing to bear in mind. The second thing to bear in mind is when you are on a holiday break, you cannot do a product switch with most of the lenders. So if you are coming up to the end of a deal, maybe you're 4 months away, 3 months away, think about this. Make sure you do your product switch first. Make sure you've gone on to one of the best rates that you can, and then do your holiday break. If you rush first of all to do your holiday break, then your deal comes to an end. You're going to be charged the higher interest, even though you're not actually paying it for 3 months. When you do come to pay it again, you're going to be paying more than you would do had you done your product switch first. And in 3 months' time, these rates may have gone up. So really important, don't rush in on your holiday break, especially if you're about to come to the end of a mortgage product. So they're my tips on product switches. Obviously, if you've got a broker, do speak to a broker. If you've got any questions for me, please do leave them below. I will answer as many of them as I can. This is just mortgage information and tips. If I can help any of you or tell you something you didn't know, brilliant. If it ends up where you do a product switch and you save some money, brilliant. So that's the aim of this video. It isn't a plug for business at all. I'm overwhelmed, as you can imagine. And I do need to get back to it. So I just wanted to come on quickly and just give you some information there. And I really hope that it helps you out. Have a great day, stay safe and well, and hopefully see you here soon. Bye.